What if I told you that retiring rich doesn't require picking stocks, timing the market, or obsessing over financial news? The truth is, the simplest strategies are often the most effective. And you don't need to be a Wall Street expert to succeed. With just 3 ETFs, you can build long-term wealth and retire comfortably, stress-free. This approach leverages diversification, low costs, and the long-term growth of the global economy. In this video, I'll break down the only 3 ETFs you need to grow your money, beat inflation, and generate passive income in retirement. By the end, you'll have a clear, actionable plan to take control of your financial future. Before we start, click the subscribe button and ring the notification bell so that you're notified when we release a new video. Quick disclaimer, this video is for informational purposes only. Always do your own research or consult an investment professional before investing any money. Now, let's get started. When constructing a building, the foundation is the most crucial element. It provides stability and alignment for everything that follows. Similarly, the foundation of your investment portfolio can be the Vanguard Total Stock Market ETF, VTI. It's designed to be a foundational element, offering broad exposure and long-term growth potential. VTI gives you instant ownership in over 4,000 U.S. companies, representing a diverse range of sectors and industries. This vast diversification is key to mitigating risk and capturing the overall performance of the American economy. From tech giants like Apple, a global leader in innovation and technology, to small, innovative startups that are shaping the future, VTI provides exposure to the entire spectrum of American enterprise. It allows you to participate in the success stories of both established corporations and emerging businesses. No need to pick winners or losers. The fund does it for you. You own the entire U.S. market, capturing the collective performance of thousands of companies. This broad diversification reduces the impact of any single company's performance on your overall investment. Historically, the U.S. market has delivered 8 to 10% annual returns over the long run, demonstrating its resilience and growth potential. With VTI, you capture that growth simply and efficiently without the complexities of individual stock picking or active management. The best part? The expense ratio is just 0.03%. That's $3 per $10,000 invested per year. This incredibly low cost makes VTI one of the most cost-effective ways to invest in the U.S. stock market. High fees eat away at your returns, diminishing your long-term wealth accumulation. But VTI keeps costs almost non-existent, allowing you to keep more of your investment gains. Why pay more for active managers who rarely beat the market, especially when you can achieve broad market exposure at such a low cost? VTI automatically adjusts to market changes, ensuring that your portfolio remains aligned with the overall U.S. stock market, so you don't have to rebalance between large, mid, or small caps. The fund maintains its target allocation, saving you time and effort. It's a set-it-and-forget-it investment, perfect for those who prefer a passive, long-term approach. Buy, hold, and let the market work for you. Embrace the power of compounding and the long-term growth potential of the U.S. economy. VTI should be the largest holding in your portfolio, serving as the foundation upon which you build your investment strategy, representing your belief in American innovation and growth. It's a vote of confidence in the future of the U.S. economy and its ability to generate wealth over the long term. Every new product, every business success, every breakthrough innovation contributes to the overall value of the U.S. market. A piece of that value flows back to you through capital appreciation and dividend payments. This is about building wealth on a foundation of proven, long-term growth, not chasing short-term trends or speculative investments. VTI is your ticket to the entire U.S. economy, providing access to the engine of global innovation and wealth creation, all in one low-cost fund. It's a simple, effective, and efficient way to invest in the future of America. Make it your core holding. Build your portfolio on a solid foundation of American growth and innovation.
Although VTI, the Vanguard Total Stock Market ETF, gives you broad exposure to the entire U.S. stock market and is a fantastic foundation for any investment portfolio, don't fall into the home country bias trap. It's easy to think that investing solely in the U.S. is enough, but that can be a limiting and potentially risky approach. The U.S., while a significant player, is only about 60% of the world's stock market capitalization. That means a substantial portion of global investment opportunities lies beyond our borders. So, what about the rest? Are you missing out on potential growth and diversification by ignoring international markets? Enter the Vanguard Total International Stock ETF, VXUS. This ETF is your passport to the global market, offering a simple and cost-effective way to diversify your investments beyond the US. VXUS gives you exposure to thousands of companies across Europe, providing access to established economies and leading global brands. Asia, with its dynamic economies and rapidly growing consumer markets. Australia and emerging markets, which represent some of the fastest growing economies in the world. You own global giants like Nestlé, the Swiss multinational food and beverage conglomerate, a staple in households worldwide. Toyota, the Japanese automotive manufacturer known for its reliability and innovation, and Samsung, the South Korean electronics giant, a leader in smartphones and technology, plus fast-growing companies in developing economies, tapping into the potential of emerging markets and their expanding middle classes. Diversification isn't just about owning more companies. It's about creating a portfolio that can weather different economic conditions. It's about different economies, currencies, and growth cycles, spreading your risk across various markets and reducing your portfolio's sensitivity to any single country's performance. There have been decades when international stocks outperformed the US and vice versa. Market leadership rotates, and diversifying internationally allows you to participate in those periods of outperformance. VXUS ensures you never miss out on these global opportunities, capturing growth wherever it may occur. The expense ratio is just 0.07%, making it an incredibly cost-effective way to access the global market. That's only $7 per $10,000 invested, a small price to pay for the diversification and potential growth that VXUS offers. VXUS handles all the complexity of global investing for you in one click, simplifying the process of building a well-diversified portfolio. A balanced portfolio might be 60% VTI, representing your US stock holdings, and 40% VXUS, providing your international exposure. This allocation aims at mirroring the world market, giving you a proportional representation of global economic activity. This reduces risk by diversifying your investments across different countries and sectors, and captures growth wherever it happens around the globe. Emerging markets offer huge potential for growth, driven by factors like increasing populations, rising incomes, and technological advancements. And VXUS gives you safe, diversified access to these markets, allowing you to participate in their growth without taking on undue risk. With VTI and VXUS working together in your portfolio, you're not just a domestic investor, you're a global investor. You're not just an American one, limited to the performance of the US economy. You're positioned for growth no matter where it happens in the world, diversifying your portfolio and maximizing your potential returns. VXUS is your essential second ETF, completing your core portfolio and setting you up for long-term success in the global market.
Growth is great, especially when you're younger and have decades to compound your returns. It's exciting to see your investments increase rapidly, and growth stocks can certainly provide that thrill. But as you approach retirement, your investment priorities naturally shift. The focus moves from aggressive growth to preserving capital and generating a steady income stream. Income and stability matter more. You need investments that can provide a reliable source of cash flow to cover your living expenses, and you want to minimize the risk of significant losses as you transition into retirement. That's where the Vanguard Dividend Appreciation ETF, VIG, comes in. It's a powerful tool for building a portfolio that prioritizes both income and stability. VIG focuses on high-quality US companies, the kind of businesses that have stood the test of time and are known for their financial strength, that have increased dividends for at least 10 consecutive years. This consistent track record of dividend growth is a key indicator of financial health and stability. These are stable blue-chip businesses like Microsoft, a technology giant that continues to innovate and generate strong profits. Johnson & Johnson, a healthcare leader with a diverse portfolio of products and a long history of dividend increases, and Procter & Gamble, a consumer goods powerhouse with brands found in households around the world. With VIG, you get both price appreciation as these companies continue to grow and generate profits, and a growing stream of passive income. This income stream can provide a valuable cushion during retirement. Dividends provide cash flow you can use in retirement without selling shares. This allows you to maintain your principal and continue to benefit from potential future growth. As these companies raise dividends reflecting their increasing profitability, your income keeps pace with inflation, helping to preserve your purchasing power over time. Dividend growers tend to be more stable and less volatile, as they are typically well-established companies with strong balance sheets, especially during market downturns. They often act as a safe haven for investors seeking stability during turbulent times. VIG's expense ratio is just 0.06%, making it an incredibly cost-effective way to access a diversified portfolio of dividend-paying stocks. $6 per $10,000 invested. This low-cost structure allows you to keep more of your investment returns. As you near retirement and your need for income increases, you can shift more of your portfolio into VIG, increasing your exposure to these stable, dividend-paying companies. For added income and stability, it's a strategic move to fortify your portfolio as you transition into retirement. Historically, dividend growers have outperformed the market, demonstrating their ability to deliver strong returns over the long term, with less risk. This makes them an attractive option for investors seeking a balance between growth and capital preservation. VIG completes your portfolio, providing a crucial element of income and stability. Balancing growth with reliable income, it helps you achieve a well-rounded investment strategy that meets your specific needs and goals. It's the final piece, bringing everything together to create a cohesive and effective investment plan of your three-fund solution, ensuring a diversified and balanced approach to investing for the long term. To recap, VTI for U.S. growth, VXUS for global diversification, and VIG for stable, growing income. This three-fund portfolio is all you need for a powerful, low-cost, diversified financial future. Just contribute consistently, reinvest dividends, and stay invested for the long term. Let compounding do the heavy lifting. This simple approach puts you in control, without the stress or complexity. If you found this helpful, check out our other videos for more investing ideas. Thanks for watching, and we'll see you in the next video.